Welcome back to Morning Trade Live. It's time to go inside out on Apple. The Worldwide Developers Conference is underway, and the keynote address at 1 p.m. Eastern Time. Paul Powers, CEO of FISNA, is with us. And, we always thought about Apple Intelligence, the revolution in AI, and, of course, a super cycle for Apple. Where do we stand? Are our expectations too high?
I think they're higher than Apple would like them to be. All indications are that Apple's sort of downplaying the importance of this event, and they're trying to reel in expectations of what they're going to be announcing with AI. We know that they're likely to announce things like live translation with AirPods, battery learning so that your battery lasts longer, which is great and all. But when you're looking at your competition, like Google and Meta, and the LLM capabilities that they have, large language models, the multimodal AI experience where they're able to understand images and sound and videos better, it really kind of paints this bleak picture where Apple Intelligence has been talked about for about a year now, but the rollout's been mediocre at best. And I think that Apple really needs to reassure investors and developers that they're going to take AI very, very seriously this year.
And what does Tim Cook need to bring? I mean, obviously, this is exciting. It's more about the developers and the new ideas. We think about the VR headsets, or it's supposed to be new ideas and somewhat groundbreaking. You think we'll get any of that?
I think we'll hear a lot of talk that might sound like that, but the actual execution is probably going to come later. Like, for example, we believe that they're going to be rebranding Siri, and for good reason, but probably the rollout of that's not going to happen until 2026, which is a little bit slow. And when it comes to things like VR headsets, you can hit the nail on the head there. AR, VR, those types of, like Vision Pro came out, and a lot of people had really high expectations, but the price has been too high, and the applications have been too little. And also the intelligence has been missing. Now, one move that I think Apple's going to be making now that is the right one is to be actually opening up their AI ecosystem so that developers can work with LLMs that Apple has, and they'll be able to finally allow developers to work with those, but in a very narrow way. It might be a little bit too late, a little too late. So things to look for are look past the design changes, look past the fact that they're changing the operating system names or numbering system from operating system iOS 19 to iOS 26, and care more about, okay, what are they actually doing with Apple Intelligence? What kind of new AI capabilities are coming, and when are they coming? Because 2026, 2027 is way too late in the game if you're going to be seriously competitive with Google, Samsung, Meta, and others.
Yeah, let's talk about some of the peers and, the AI capabilities coupled with the administration's pressure on Apple to make things here at home. Most of the phones now will be coming from India, but there's still a lot of pressure in a regulatory environment on Apple, too. I mean, do the mega cap peers have an advantage here?
Potentially. I mean, I think there's obviously a totally different set of risks that Apple's exposed to, from antitrust concerns to moving manufacturing from China to India, which is going to take time and is going to involve a lot of costs. Those are a major concern. But I think the biggest concern is really around perception, right? So if you think that you go out and buy a Pixel that is 3 times as smart, in quotation mark, as the competing Apple phone or wearable, or if Google comes out with a headset that's affordable and actually has real AI embedded in it compared to what Apple comes out with, it could be a runaway for Google. And that's the bigger concern from my perspective, is less about the short-term manufacturing costs or the almost cyclical antitrust issues that we go through. It's more around, how is Apple stacking up against the competition with the latest technology, and AI is becoming critical for smartphones. And I'm an Apple user. I've had an iPhone for years now, and over the past year, I was looking forward to the Apple Intelligence updates, but most of what I noticed were awkward news summaries on my phone that didn't make sense when you actually read the full article, right? Which is something that Apple's kind of, is a little bit of a rolling joke, and Apple's kind of famous for now. And they've been rolling that back, but they need to find smarter ways to integrate real AI into the user experience, both from a media perspective, think of things like capturing images with your phones, auto enhancements, the ability to make live edits, all the way to things like Siri, making Siri actually useful. I mean, I have Siri on my phone and I never use it. I use ChatGPT, right? And if Apple wants to stay relevant in the coming years, they have to tackle that, and they have to make it clear that they are tackling that in the keynote, not only the keynote today, but also in the rest of the conference over the next couple of days. And that's something that is not really expected to happen, unfortunately.
I think it's interesting how you think Siri needs to be revamped. I was going to ask you why, but it sounds like you're using a lot of ChatGPT. I mean, do you ask ChatGPT the weather and the time and I don't know what else, fun facts and such, and do you fully trust the AI responses?
Well, I don't use ChatGPT for the time and the weather. Siri can do basic things like that, but that was acceptable a year ago, 2 years ago, maybe 3 years ago. But nowadays, you want an AI assistant that's actually able to do quite a lot more, like answer complex questions, give you complex recommendations that are really tailored to you. And Siri, for a long time now, has just never really fulfilled the promise of Siri. We've seen the ads, we've seen the announcements in the past about what Siri is supposed to be able to do, but very often the responses you get back from Siri are nonsensical. It's slow, and Siri, and that's not a personal opinion of mine. That's pretty widespread. There are a lot of jokes about how Siri performs, and so I think rebranding is necessary to get themselves away from that. I think the best thing that Apple can do in this conference is just to say, hey, look, we rolled out Apple Intelligence. We're taking AI seriously. Over the past year, we haven't had the kind of success that we were hoping to have or that we were expecting to have, but here's a real serious effort to revamp, make sure that we're not only playing catch up, we're actually going to leapfrog ahead of the rest of the field. And they need to make a really strong case. And the fact that that all the leaks so far seem to be indicating they're going to be focusing on rebranding of operating systems and the display and a couple of AI capabilities, but nothing that's going to be game changing, is pretty disappointing. I think it's the exact opposite of what they need to be doing right now.
All right, well, we'll see. Apple's liquid glass interface is set to revolutionize iOS 26. Maybe it hints at a 20th anniversary iPhone. But this is also about trying to woo in developers and new ideas, too. So let's see what comes of it. Paul Powers, CEO at FISNA. Thank you, Paul. All right, let's go ahead and trade Apple, which had a high of 260, went down to 169. Today, it's back above 200. We have Tom White, host of Fast Market, and he has two example trades for us today. Good morning, Tom.
Hey, good morning, Nicole. Yeah, you look at the implied volatility levels here in Apple, they're pretty low. They're in the bottom 1/4 of levels that we've seen over the last 52 weeks. So with that being said, you don't know what's going to happen, right? Last year during the Worldwide Developers Conference, the stock spiked higher on the back of the anticipation of AI tools for their products, right? And the supposed ramp up in iPhone sales that never kind of came to fruition. So implied volatility levels pretty low going into the Worldwide Developers Conference. So with that in mind, the first strategy I looked at, if you're bullish on this name, I looked at a strategy that, you can actually buy a directionally biased type of strategy using the option market at a low level due to those low implied volatility levels. So going out to the July 3rd weekly cycle, so you've got about 24 days to expiration in this first example. And we're going to look at buying an unbalanced or broken wing call butterfly to the upside. I'm going to buy one of the July 3rd weekly, one of the 200 strike calls, sell two of the 215 strike calls. That's where you want it to go. And then buy one of the 220 strike calls. So in essence, in this strategy, you're buying a bullish $15 wide call vertical, offsetting some of the cost by selling a $5 wide call vertical with that same common short strike there at the 215 line. You're going to pay roughly about a $570 debit for that. So that'll take your break even up to $205.70 over the next 3.5 weeks. That's only about 5% above the current share price. Now, the apex of profitability on this type of strategy is at or near that 215 strike, but even above 220, you're still going to have basically a double in profit, nearly a double in profitability on this one. So this might be the way to look at it if you're a little bit more bullish, giving yourself a little bit of duration in this type of strategy.
Okay, and you have a second example trade. How does it differ from the first?
Well, it's completely opposite. You're still taking advantage of those low implied volatility levels, Nicole, but at the same time, it's more directionally biased to the downside. So a bearish type of strategy going out to the July monthly cycle. So I'm going to give myself a little bit more duration on this one. And this is one of those strategies you can use for speculation if you think the stock's going to go lower over the next month or so. or if you're already long the shares and maybe you want to protect some of your long stock position. So I looked at a bearish call vertical here, taking advantage of that low implied volatility levels. Going out to July 18th monthly cycle, so 39 days to expiration. We're going to buy the 205 strike call just slightly in the money. And then against that, sell the 190 strike call. So a bearish $15 wide call vertical to the downside. You're going to pay roughly about a $470 debit on it. That's going to be your risk, $470 per spread. And it takes your break even down to $200.30 over the next basically 5.5, 6 weeks. That's about 2.2% below the current share price. So you don't need a big move to the downside. You're giving yourself plenty of duration. You're taking advantage of that higher implied or lower implied volatility. And if the stock does start to fall, implied volatility levels will probably pick up. That'll also expand the price of this vertical before expiration. And this gives you some flexibility as far as trade management goes too, because you're buying something directional. It gives you that 39 days. Hey, I don't need to wait 39 days to exit this trade. If the stock starts to fall ahead of expiration, it gives you a little bit more flexibility if the price of this vertical starts to expand.
Well, really excited for the Worldwide Developers Conference. It's been a countdown. We've been talking about it for a long time. Let's see, and thank you for those example trades as well. Tom White, good luck there at Apple today. And we'll have all the details for you here on Schwab Network from Apple's conference as well.